Today's trade is SIFY Technologies. In the past, in the past 6 months, it's had this really strong wide consolidation and we've seen a strong support right at about $4 plus or minus a few cents. I think that we have 386 it hit one time, but in the meantime it's having these wild swings. Anyway, from first glance you can kind of make out a symmetrical triangle, a descending triangle, but then you realize it only has these two touches at the top, and it gives us a price target of, well, let's take a look. It gives us a price target of somewhere at about -50 cents. So we could keep that one in mind for maybe a long-term goal, but for right now I'm preferring to zoom in to here and call this a descending triangle. It looks much better once you draw the lines. Let's see, there we go. Do we have... There, that works much better with the logarithmic chart. So, the start of the formation is at 625, bottom of the formation is at $4. We do our little measuring formula, as always. Flip it from the bottom, where we expect it to break out to the downside and to the upside, and we get our price targets, which give us, let's see, $7 right about, and $1.50. Okay, now the next part. We see if we can take an educated guess to what side we think it's going to break out. First, according to the Bulkowski studies, a descending triangle breaks out to the downside 64% of the time. So we have a slightly more than random chance that it breaks out to the downside. Secondly, we take a look at the momentum indicators. I always use my little divergence set. I'm going to X out the relative strength index this time since it gave me no answers. First, we will squish that so we can take a look at the slow stochastic. And that gives us, we can draw a little bit of a symmetrical triangle, and this represents the midterm trend. Since this is the longest term formula that I have, see the 10-day smoothed and also slow. And this one actually broke out giving a sell signal yesterday. Next, the 5-day momentum, which shows us the very short term, only broke out today slightly, so we'd expect that one to break out to the downside a little bit more, and in the end we do expect this pattern completely to break out to the downside. Okay, so get rid of those studies. 68% chance of a downward breakout, and target 150, and I still don't expect it to go to the upside based on everything, so I'm deleting that for now. Of course, if you want to set a buy order, you may. You could set it at, let's see, you could set it around $4.75, and then of course calculate your risk reward, all that good stuff. Okay, so target 150, and we would get in. I told you that this went down to 386 at one time, so let's just say we'll get in at 384. Enter stop sell at 384. Okay, 384 down to 150 gives us a, let's see, $2.34 reward. And according to, once again, the Bulkowski studies, the chance that this pattern will hit its price target is 54% during a bull market. So during a bear market, it's probably a little higher. So, but we'll say 54% chance. Okay, so we have that. Now we go into the short-term chart, 30-day, and we'll make it a little easier to see. Go to the 90-minute, maybe 60-minute. Yeah, a little bit better. And we find a good place to put our stop. Since this is going to be a longer-term trade, I'll give myself a little breathing room on this one. So let's see. 84. We could do, if you're a little itchy and you want to take a lot of risk and then like buy a lot more shares, sell a lot more shares than you normally would, you can put your stop at 410. That's probably what I'm going to end up doing. If you want to hold out for a little longer, you can put your stop all the way up at $4.50, but I don't like that too much. So either, let's see, 410, 425 maybe. I'll go with 425. So 425, and we get in at 384, which gives us a risk. Well, stop loss 425. Risk equals, let's see, 384, 425. That gives us a 16 plus 25 equals 41-cent risk. Okay, so calculator risk-reward ratios. We're going old style here. I have not done a risk-reward ratio like this on a video for a while, so we do our risk. No, we do our reward first. 2.34 times probability of success, which is 0.54, gives us a first number of 1.26, and that number at this point is meaningless. We're calculating basically a indexed value, just something that's supposed to mean something to us, just an arbitrary number. And then our risk is 0.41 times the 54% out of 100, so 40.46, and that gives us a second number of 0.18 or 189. We'll give it an extra decimal place. The other one was just 1.26, and then we divide the two, so 1.26 divided by 0.189, and our probability adjusted risk to reward ratio is 6.67, which is good enough. As long as it's above 6, I'll take the trade. If you want it to be higher, your risk to reward ratio, then go ahead and make your stop $4.10. All right, so this is our strategy. Get in at 384, wait for a breakout. Today looks like a pretty bad day for the stock, and we will hold our time target. Just to remember, we're doing this kind of we have a time target, so don't get frantic if it moves against us for one day. Okay, so $1.50 puts us at just about the end of October, so that's when we'd expect it to hit that number. Alright, if you have any questions, please post in the comment box. Happy trading.